buy that I got on the table is still a very aggressive buy. Oftentimes, you know, you'll blow off a top by a little bit, and then you'll come jamming right back down into it. So just because we popped up above that top doesn't necessarily mean we're going to the moon. This is a pretty key area to hold here, this action line with DPTL. If we break down below it, yeah, we can stretch down to that 50 XMA and still not violate this by too much. So again, we're going to find out kind of quick here whether or not we just kind of blew off the top by a teeny bit and now we're going to roll back down, or if in fact this area is going to hold. We really don't want this to go much lower than we've currently traded. Okay, I averaged into this trade. We took target 1 off the board, so now there's really, if we get stopped out, it'll be a net break even on the trade. I'm going to lock up my stop. I really don't want this market rolling back down. If it does, I'll just let my contract get stopped out. Okay, winner. So a nice little opportunity there. A little bit lower rated. I would have, honestly, if we had held the DPTL on the action line without this little extra dip down, I would have very possibly gone for a increased size on my profit target. Would have looked to push it up, having a stronger belief that the breakout to the upside was for real and that, you know, we were destined to put in a nice leg up. But we breached that by a full 6 or 7 ticks. It's not that big a deal, but just gave me pause as to whether, you know, we were going to do what we're doing right now. So that little extra dip down cost me a little bit. I probably would have gone for 12 to 15 ticks, maybe 18 ticks, and clearly would have had no trouble getting that. So this was a X trade. Obviously there were some other factors here that made this a good place to be getting long, but it was an X trade.